Okay, let's dive in. You wanted to really get under the hood with Swiggy, right? Look at their recent performance, especially this big push into quick commerce in India.
Yeah, and how they stack up against the competition.
Exactly. So consider this your shortcut to understanding the strategic picture.
Right. Our goal here is to, cut through the noise a bit, take the key info you shared and piece it together so you can really grasp what's driving Swiggy right now.
It's a story of growth, definitely, but also heavy investment, isn't it?
That's the core tension, yeah. Rapid growth meeting intense investment.
Because Swiggy, well, it isn't just that app for ordering dinner anymore, is it? The information shows they're like a much broader platform now.
Definitely. They've really transformed.
So what are the main pillars holding it all up?
Well, you still got the core food delivery, obviously. That's where it started. But quick commerce, mostly through Instamart, that's become absolutely central.
Instamart, yeah, you hear that name a lot.
You do. Then there's their out-of-home dining part, restaurant discovery, bookings. A bit less visible is their supply chain and distribution arm. And they're also working on some newer platform innovations.
Okay, so several different engines running, but Instamart, that feels like the one getting the most attention and maybe the most fuel right now.
That's a good way to put it.
So looking at the overall company for the last fiscal year, FY25, what's the sort of headline news?
The big picture is pretty significant revenue growth. We're talking over 34% up from the previous year.
Yeah.
Which is, really impressive.
Wow. Okay. More than a third increase.
Yeah. But, and this is the crucial part, when you look at the bottom line, the consolidated losses, they didn't just continue, they actually widened quite a bit.
Oh, by how much?
Over 32% more than the year before.
Okay, so growth is strong up top, but the losses are actually getting bigger. Sounds like, well, heavy spending somewhere.
Exactly. And the numbers really point towards the investments pouring into quick commerce.
Ah, Instamart again.
Yep. That expansion was a huge factor in those consolidated losses going up, especially hitting a kind of peak impact in the last quarter, Q4 FY25.
That's the cost of building something big, fast, I suppose.
It really is. You spend money to build that scale quickly.
But was any part of Swiggy actually making money during this period, or was it all just investment mode?
No, that's where it gets interesting, and it's an important distinction. While the overall picture showed a loss, the original food delivery business was profitable.
Oh, okay, the core business is holding its own.
Right. And interestingly, that out-of-home dining segment, it actually turned profitable for the first time in Q4 FY25.
Really?
Yeah. So you have parts of the business standing on their own feet, financially speaking. But the sheer scale of the investment in quick commerce is, for now, outweighing those profitable bits.
Ah, okay, so it's less like the whole ship is leaking and more like they're taking profits from established areas and deliberately pumping them into this hypergrowth quick commerce section.
That's a very good summary of the strategy, yes.
And quick commerce, it really is hypergrowth in India, isn't it? The market's just exploded.
Oh, absolutely exploded. It went from, relatively small just a couple of years back to a multi-billion-dollar market today.
Billions already. Wow.
And the projections, they suggest it could get many times larger in the next few years. We're talking potentially tens of billions by 2030. It's like one of the fastest moving consumer markets anywhere.
That kind of massive shift, it can't just be about wanting crisps delivered faster, can it? What's really driving that change in how people shop?
Well, you've hit on something key there. It's definitely fueled by, busy city lives, everyone having a smartphone. Time is precious.
Sure.
But it's also a fundamental shift in expectations. People now demand almost instant access to a whole range of daily stuff, not just takeout food. It's changing how people run their homes, their schedules.
So it's convenience, but also something deeper.
Yeah, some sources even frame this quick commerce boom as a kind of economic indicator for an emerging market like India. It signals a shift towards, well, a more developed economy where speed and efficiency are really valued and actually achievable for more people.
Interesting, like a sign of economic evolution almost.
Exactly. It points to changing consumption habits, creates a ton of logistics jobs too. It's a big deal.
So where does Swiggy's Instamart fit into this massive, strategically important market? How are they positioned?
Well, Instamart is definitely a major player. They hold a pretty significant chunk of the market, roughly around a quarter.
Okay, 1/4. And they're expanding fast.
Oh, yeah. Pushing really hard and expanding their physical presence, adding lots of those dark stores.
Right, dark stores. Just quickly for anyone listening, those are like mini warehouses, right? Deep in neighborhoods, not actual shops, just for packing those super fast deliveries.
Precisely. They're the engine room for that promise of delivery in minutes. You need them close by. And building that network out, that takes serious investment. Swiggy added a lot of new dark stores, expanded their operating space significantly, especially in Q4 FY25.
And that aggressive expansion, adding all those stores.
That's exactly why Instamart saw its losses peak in that quarter.
Okay, the link is crystal clear now. Heavy investment in the physical network for quick commerce, highest Instamart losses, bigger overall Swiggy losses in Q4 and the full year.
Got it.
What's the company saying about when those Instamart losses might start coming down? Is there a light at the end of the tunnel?
Well, the management commentary suggests they do expect those Instacart losses to decrease progressively going forward.
Progressively. Okay. Depends on what?
How quickly that happens really hinges on getting the unit economics better, things like boosting the average order value, getting people to buy more each time, and critically, how the competition plays out.
Ah, competition. The elephant in the room for quick commerce, I guess. Who are the main rivals battling Swiggy Instamart?
The main ones highlighted are Blinkit, which is, backed by Zomato and Zepto.
Blinkit and Zepto, right.
But you also can't ignore the bigger players like Geomart, Amazon, Reliance, Flipkart. They influence the whole online retail scene. Even if they're not all doing the exact same 10-minute delivery thing, they shape expectations.
Sure, the whole ecosystem matters. And among those main quick commerce players, how do the market shares look right now?
Blinkit actually has the biggest slice currently. They're approaching like half the market.
Wow, nearly half. Okay.
Yeah. Then Zepto's the next biggest, and then comes Swiggy's Instamart, third in line based on current market share data.
So Blinkit's leading the pack in share. How about growth rates? Are they all growing like crazy, or is Instamart's growth unique?
Oh no, the crazy growth is across the board. Both Instamart and Blinkit showed incredibly high growth in FY25 revenue for their quick commerce arms, well over 100% year over year.
Over 100% for both. That's staggering.
It is. And Zepto also grew extremely fast. It shows this isn't like a settled market yet. It's still a fierce land grab phase. Everyone's trying to build scale.
And you mentioned dark stores earlier as key infrastructure. How do Swiggy and Blinkit compare there?
Well, as of the end of Q4 FY25, Blinkit actually had a larger network established, more operational dark stores than Instamart at that point.
Okay, so Blinkit ahead on share, and at least then on the physical footprint too, really highlights the competitive pressure.
Absolutely. It's a race to build out those networks city by city, neighborhood by neighborhood.
Okay, let's try and put this into a direct financial comparison. Let's focus on Swiggy versus Eternal, which is Zomoto's parent company. That seems like the most direct comparison from the info we have.
Right, and that comparison really underscores the different places these two companies are at right now.
How so?
Well, for the fiscal year FY25, Eternal, Zomoto's parent, had higher overall revenue than Swiggy. And crucially, Eternal reported a significant profit for the year at the group level.
Profitable overall. And Swiggy.
Swiggy, while achieving that really strong revenue growth we talked about, reported a pretty substantial net loss for the year.
So one is showing overall profit, the other is still deep in investment mode, driving growth but posting losses.
Exactly. And like we discussed, that jump in Swiggy's Q4 losses, nearly doubling compared to the same quarter the previous year, that ties straight back to the spending surge, mostly for quick commerce expansion.
Right. Now, Swiggy did recently go through its IPO process, didn't it? What does that mean for their finances now?
Yeah, completing the IPO brought in a very significant chunk of cash. So even though they are burning cash on operations and these big investments,
They have a cushion.
they have a healthy cash balance right now, yes. It gives them the financial muscle, the firepower to keep pursuing this expansion strategy.
Okay, all right. Let's try and wrap this up then, connect the dots for everyone listening. What are the absolute key takeaways about Swiggy right now?
I'd say first, you're looking at a company that's successfully evolved way beyond just food delivery. It's a multi-business platform now.
Okay, point one, diversified platform.
Second, its revenue growth is strong, no doubt about it. But that growth is significantly fueled by massive, deliberate investments into the quick commerce space via Instamart.
Right, and that investment, point three perhaps, is a double-edged sword. It drives growth in this red-hot market, but it's also the main reason their overall losses widened, especially in the last quarter.
Precisely. They're making a big bet that quick commerce will become profitable down the line.
And point four, they're making this bet in an incredibly competitive market. Quick commerce is fierce. They're a major player, yes, but currently not the leader in market share or physical footprint, facing tough rivals like Blinkit and Zepto.
Very tough rivals.
Yeah.
And the contrast is stark when you look at their main competitor, Zomato's parent Eternal, which has reached overall group profitability.
So Swiggy is clearly in a different strategic phase, prioritizing capturing market share, expanding rapidly, and banking on things like operational efficiency and scale to eventually make quick commerce pay off.
It's that classic business dilemma, isn't it? Immediate profit versus aggressive growth and market share in a sector that's just taking off.
It really is. And it makes you think, considering the sheer speed and scale of this quick commerce growth, all the money being poured in, this intense battle for customers, how might this whole race for instant delivery fundamentally change the economics for these companies? What does that path to actually making money sustainably look like in the years ahead?
That's the multi-billion-dollar question, isn't it?
Definitely something to keep watching. It's a fascinating space.